trade both? And how should I feel if I'm long, if I'm long, short, if I'm short, short? Where's that opportunity coming from? And what should be my comfort level if I have positions in both? Because you and I are going to come on here every Tuesday, Jermal, and chop it up around what is the big story, the big mover from early in the week. And the big mover from early in the week is the big movers to the downside. What happened yesterday, my friend?
It was pretty ugly yesterday. I will say it's weird because there's been this relationship between tech and the 10-year, right? And we've seen that inverse relationship throughout the year. However, 10-year didn't really move much yesterday and tech got waxed. And a lot of it, I think, is, and I believe this is real. I believe there's definitely some overcrowding in a lot of tech stocks, right? For the past year and a half, those have been the ones that have been the high flyers. And so you saw some selling yesterday, right? And you got a couple of the big ones here on the board that took hits. Twitter down 5.8%, Snap down 5.3%, Facebook down 4.9%, to add insult to injury, along with their issues between their actual platforms yesterday. So it was pretty rough. And I tell you, if I already have, there's a couple of tech names that I'm long already. I didn't want to get too much longer. And I also didn't feel like it was a territory to sell anything to hedge, but I would have definitely gotten long some sticks yesterday because sticks was at a very attractive level.
Great points there. Honestly, what Jermal just did was like outlined so many fantastic things, which is like he was already long. And so he was like, all right, well, I'm not going to get longer here. You know, you never really want to, like, if you're at your risk level, you don't want to mess around with that and kind of like double up your risk. It's not like being at the roulette table and being like, I'm betting red and then I'm betting red again. But you don't want to, double up there. But you did speak to something that's so true and is my major takeaway. And people who've watched the program have probably heard me say this so many times. They're sick of me saying this. When you have a big sell-off in the stock market, especially on these Mondays, of course, the stock market can move lower on the next day and we can go into full-on crash mode. Here's the deal, though, friends. We go into full-on crash mode once every year, every couple of years. And what we see is a big fat red day every couple of weeks. What we see most often is the bounce back the day after. We've shown the statistics that the stock market tends to move higher around 52, 53% of the time. After a down day, the stock market tends to move higher more than 60% of the time. And we're in the midst of that bounce right here on Tuesday afternoon. And it's a big bounce, all of these names bouncing back here today. And so that's to your point of like, I would have loved to get long the Sticks product, which had a big down day yesterday and even bounced back actually into the close. Same with NASDAQ. They were down more than 2% yesterday, bounced back into the close and then bouncing back here today. And that just shows you, something that we talk about all the time, which is like mean reversion in short-term activity. Now, you can have your long-term biases, maybe your long stocks, your short crude oil, your long gold, or what have you. But Jamal's point about yesterday was like, man, I would have loved to pick up some sticks yesterday on the big down move. There you go. For just a short-term mean reversion. And you could have gotten rid of it by yesterday's close or here today with the bounce back. Not everything, Jermal, has to be like, if I'm looking at buying technology stocks on this 2% down day yesterday, like I've got to put that away and have it for weeks. No, futures, a big part of them and a big part of the small technology product, which is really gaining steam in volume and interest, is just short-term buying and selling, right?
Short-term buying and selling, and also having short-term biases as well. And, I think the other thing too, I want to make sure I accentuate, just because I couldn't buy didn't mean I necessarily had to sell, right? Like you don't have to trade it in that manner just because you feel like you have to do something there. And that would have been the wrong day to look to all of a sudden say, hey, I should short sell some sticks and get, hedge my other positions. No, I felt confident in where I was with it. But, again, yeah, short-term biases. I mean, this was the big move yesterday and we've seen, some of this rebound back today. So, and again, if you're not comfortable, if you were still fearful based on yesterday's move, if you got long yesterday, still wondering like if it could go lower and have the bounce today, you do have this opportunity to clear some off of your table.
Absolutely. And that is a great point because that's a trade or just, I guess, an idea in and of itself, which is like I'm long. I'm in the midst of this big down move here. And a lot of people, when push comes to shove, it's like, well, I just need to get out. And it's like, take a second, take a breather here and think about the facts, which is most of the time the stock market tends to bounce back the next day. And so if you want to get rid of some of those longs, then lean on that statistic and get rid of those longs on the bounce back. Now, of course, it can continue lower. And we always make it a point when you're talking about commodities, like those of you watching natural gas recently and watching crude oil, those markets don't have the same bounce back or just reversal statistics as the stock market. So those are ones that maybe you see like a big down day in natural gas or something like that. Maybe you do want to manage, but I like that you leaned on that stock market statistic, Jamal, and said like, I'm not going to get longer, but I'm also not going to sell out of my positions because it tends to bounce back the next day. And now today, if you want to reduce risk, now do it into the bounce back. But what's really interesting, and not a lot of people know this about, the world of crypto. I mean, I've been trying to hammer on this as much as possible, but I just overheard actually a coworker today listening to a professional trader in the crypto space who I'm sure is a great crypto trader and knows their stuff, but off the cuff saying, oh, well, the stock market is trading in line with the crypto market. And it's just not true. Now, which isn't to say it can't become true, but the correlation's just not there. No matter how much I want it to be there, the correlation between technology stocks like NASDAQ or like STIX and Bitcoin and Ethereum and the crypto stocks that are in SCCX is like at a positive 0.2, positive 0.3. It's really not. And you can see some of it here with like the general down move in the morning and the bounce back. But there's plenty of days where Bitcoin and Ethereum are up and stocks are getting hammered, or stocks are making new highs and crypto is getting hammered. What's really nice about that idea, Jamal, is they're diversified. I could have looked at yesterday, early morning sell-off in crypto and then a midday huge bounce back to being higher on the day in crypto. I could have looked at that sell-off and sticks, looked at buying both. And yeah, I wouldn't have really made a lot of money in my stock trade there, but my crypto trade would have bounced back in my favor pretty heftily by yesterday's close. Diversified takes in uncorrelated markets mean that I've got managed risk on the table if I want to be long, or long, short, or short, or what have you. A really nice day of day trading yesterday on both fronts.
So somebody said that crypto and tech stocks are trading together. Is that what they said?
Yeah. Can you?
Yeah, I mean that doesn't make sense to me. But I mean, we also talked about maybe a week ago how crypto and the market were trading together for a little bit, small correlation. I think 0.25,
sure,
a little bit, but not tech. No, I haven't seen that. And to your point, yesterday morning was totally different. This gets to exactly what I was talking about at the beginning of the show. The idea of what essentially I didn't say is the idea of correlation of one. Yesterday morning, everything was getting sold. And I don't think there was necessarily a rhyme or reason to it. It was just people kind of wanted out for the time being. And you see that. This is exactly showing you that. This is a day chart of yesterday. Yesterday morning, everybody wanted out. All of a sudden, at one point in time, the crypto people were like, hey, let's turn these machines on. What's going on here? We need to get these stocks. We want these up. We want these crypto situations up because it doesn't make any sense for them to be tracking sticks and other things right now. So, I mean, I think that clearly shows that.
And that's what I love that you brought it up in that manner, because it is this idea of like on days like yesterday and even days like today, it's just in the opposite direction. You can, as long as these markets are diversified, because it was the same in interest rates. Interest rates in the morning, they were up big and they took a dive and then they ended the day up big. They bounced all the way back there. And it's this idea of like, if I have cryptos on the table and I've got tech stocks on the table or just stocks in general, and then I've got interest rates on the table and metals also moving, crude oil also moving, I can feel comfortable because they are diversified, day trading each of them individually. And at the end of the day, you're not going to go, 5 for 5 across all those asset classes, but you're hopefully going to go 3 for 5 or even 4 for 5. And the way you do so is with these statistics that we send to all of our community members. And also, I just want to give it out here for free so that people have a sense of how these products move. You should feel comfortable taking advantage of price action in both markets, and then also bouncing that out to commodities and interest rates, and foreign exchange also heating up as well, with US dollar near highs on the year. As long as you've got the stats to back you up, to let you know that, like, oh, okay, yesterday small technology down more than $1. That's a big move. That's an outlier I should maybe get on the other side of. Same with SCCX. When that market's moving, it's got a standard deviation actually wider than the sticks market, which is almost twice the size of it. That's just letting you know how much volatility and opportunity there is in crypto. But it's the same metrics that lend themselves to opportunity in each of the asset classes. They're diversified so you can trade them all. You've got the metrics on all of them so you know where the opportunity is. In sticks, it's outside of 60, 70 cents. In crypto with SCCX, it's outside of $1.10. And you can feel comfortable trading all of them at once on any given day. When push comes to shove, like it did yesterday, I like the idea that you're saying, like, technology stocks are down maybe for a good reason, but why are they selling off these cryptos? And the traders did come into that market and say, hey, this Bitcoin and everything else shouldn't be down. And they lifted it back up to the highs. And so you really, at the end of the day, the correlation might get there at some point. Right now, there is no correlation between stocks and crypto. Feel free to add this SCCX to your bag as a new product that trades independent.
It's always good to see these charts too. I think people should, those who are kind of new to not only futures or just trading in general, this gives you a true understanding of what volatility is, right? The idea of how much something moves on any given one day. And as much as people talk about technology being volatile, the idea of crypto is more volatile. And it makes sense, right? I mean, it's still a newer asset class, even all the constituents that are within the crypto index. It's a new asset class. Yeah. And so as a result, things are wide. As a friend of mine told me once, the idea of understanding what volatility is, you bring a guitar, let's say, into a room full of 60 people, or I should say we have a guitar between you and me, and we're trying to bid on that guitar. There's the small value. It's not going to change a whole ton, but then you bring into a room of 60 people, or I should say it's going to change a whole ton, between the two of us, right?
Sure.
But then when we get into a room full of 60 people, it's going to get a lot more narrow because of the competition, right? And so people are trying to understand that idea of what that guitar costs.
But that's the opportunity, and that's why I keep pushing. I know that we're kind of on the forefront with this crypto product. There's only one or two or a handful of crypto futures out there. And so we're kind of pushing the boundaries here. And a lot of people are a little uncomfortable. What I would say is this product is smaller, and it's like I say, it trades like an equity index future. So you don't, no wallets or anything crazy like that. And I would push people to at least look at these markets and dip their toe in and just, buy the SCCX and then scratch it, or sell it and let it run for $10 for or against you and try it out. Because Jermal, you're exactly right. Crypto right now is a space that is so young that the price action is amazing, because there are so, relative to other markets that are so efficiently priced, there are fewer people in these markets, and thus the swings back and forth are a lot greater, and thus the opportunity to us is a lot greater. So once again, push people to go at least check it out, information around small crypto and everything else, and hopefully get to trading it at some point this week. But that'll do it here for Small Stakes. Always a joy to have my friend Jermal Chandler on. We'll get your mother hopefully on the show at some point. We just need to set her up, and she'll just go for, I don't even know, 20, 30 minutes.
I know. I don't know if you want to do that. Neither one of us will say anything. It's I don't think it's I love my mom, but she's got, like you said, she's got her opinion. She's going to talk. I mean, it just says she's going to take our job, basically, is what's going to happen.
That's exactly right. She's going to take our job and Tom's and Tony's, Liz and Jenny's, Katie, Mike, everybody, because she could just rip through it for a full day. But
it won't be about trading anymore. I'll tell you that, people. It'll be about something totally different.
Entertaining nonetheless. Jermal, thanks so much for joining us here on Small Stakes. Thanks so much for everybody watching out there. Continue watching the Tasty Trade Network. We got a nice 30-minute version of Splash in the Futures coming up next. All platform, all the time, a bunch of trade ideas coming at you, everybody. We're super excited about it. Hang out. Thanks.